Good. Welcome from my side to the Family Office Conference here in Mumbai. I have structured my presentation in 3 parts. First of all, I would like to give you a short abstract of a diploma work I have done at the University of St. Gallen. It was an executive program on renewable energy. Second, I will present you some of the solutions that our company is offering to the markets. And at the end, I hope you have some questions that I am able to answer. To myself, actually, Aditya has done the good introduction. I'm an innovator of the financial markets. I have done different products and different platforms. I cannot say around the world, but at least in Europe or in Russia. I am most of it intrinsically motivated to organize products which are best for the clients. I try to look that the worm likes the fish, or the fish likes the worm, and not the angler, as most of the banks are doing. So actually, the performance, Aditya has already said, I have built up the largest equity index in Europe, Eurostoxx 50. Beside this, the very first ETFs in Europe, which probably currently is one of the largest markets today. I was in Russia for some 3 or 4 years, and I have built up in this time the first fund platform which allows global funds to present themselves in Russia. Back in Switzerland, I have done the first Swiss pension association to focusing on renewable energies. And lately, and this is what I'm going to be more in, is the Lily Bonds platform, listed liquid asset-backed bond, but on this I tell you later more on. The program of renewable energy at the University of St. Gallen is St. Gallen, which is one of the most awarded universities in Europe on economy and lawyers, has an international program, and one of the, it's a bit too loud, and at the end of the program, you are allowed to do a diploma work. The title of this diploma work was, for me, the best I could ever had. It is what I'm doing daily. Are professional investors like you using sustainable and renewable energy investments to diversify their portfolios? How strong, I won't present the whole diploma work, otherwise there is not an hour enough. But first going in, I had about 44 research partners. You see it, maybe, it's maybe too close. We have, out of these 45 people, about 40% have assets under management below 1 million. About the same percentage have over 1 billion, and still 10%, also 4 or 5, who have done this answer to my questionnaire, have over 10 billion. So I would say it's somehow the same mix up in this room. Maybe we can somehow find some comparison later on. Which are the asset classes they are investing in? So actually, maybe very interesting is, actually very interesting is that even for family offices, 1/3 they are investing in equities. You see this, the orange bar, Maybe interesting as well, for Switzerland, only some 4-5% are private equity. Maybe this is in other content in India, because I know that the private equity, or I heard about that the private equity market in India is very strong. So this is one of those which is very interesting. Bonds, 30%, commodities, 3%. I think that's clear because of the commodity cycles are coming down. How are they managing? That was the next question. How are you managing your portfolios? Are you following full passive strategies, which means replicating an index or several index? Are you doing that with ETFs, with swaps, whatever? Are you partly passively managing your portfolio? Or are you only actively managing it? Are you using direct investments or collective investments? And if you see that it's quite a good average over all of this. The next question was, what is your investment target? And I'm sorry, I just see that it's still in German. So the first was actually, are you investing towards, or are you taking attention to volatility? That's the first bar. The second is, or are you achieve a certain performance? The next was, would you like to have would you like as much performance as you can, so you go in more volatile and more risky investments, or are you just investing with as low cost as possible? Then you are maybe towards ETFs or mandates, where you put the mandate commission very low. What is next? Okay, or are you a value investor? So this is about what you see on this slide. Can you read it? Is it too small somehow? Huh? Very sorry for that. So actually, we were asking, I was asking the partners in this research, what is for you the biggest risk for your portfolio management? The biggest risk is if they have no written and controlled portfolio strategy. Can you imagine? This is our professional investors, and their biggest risk is, so if this is a risk, it happens, no strategy in the portfolio management. Was actually was a laugh. I had to laugh about that. Maybe interesting as well that there are maybe not enough controls to the mandates that they give away. I can imagine somebody has a good salespeople to offer a mandate to professional investors, family offices, banks, pension funds, but at the end, they give the mandate, but have not the control over it. Maybe the products are not transparent or not regulated enough. So that is as well a risk that they are focused on it. And, well, these are the two largest. One is that they don't have enough know-how on certain sectors where they give mandates over. So then, from the basic questions, I was swinging over to the questions on sustainable and renewable investments. Saying that, the question was, in which renewable energies are you investing? And you see, the first must be wind. It is wind. The second is hydro. And actually, this is, as most of the research partners were in Switzerland, some in Germany and Austria, it was, for me, a bit surprising. Because in Europe, and we are all these countries, Germany, Austria, Switzerland, or at least Switzerland, that is everything is full of hydropower projects and investments, because every second village up in the mountain has their own hydropower project, and then it runs another 10 kilometers, the river is running another 10 kilometers, and there is the next village making his hydropower project. So actually, I was very surprised that wind projects, which we have in Switzerland, very few, is as much as hydro. Then next is photovoltaic. This is actually, I think, one of the coming things. I think in India it's just the opposite. Most is photovoltaic, I can imagine, and then probably some wind and some water. Well, actually, the next question was, if they are comparing the risk profile of traditional portfolios towards versus a sustainable investment portfolio, are they more happy with the sustainable investment portfolios or with the traditionals? And actually, they said it's more or less the same. We do think 10% is better, and some of them said 20% is less efficient or less successful, but probably 2/3, 68% said this. For us, it's the same. We have to give the targets of the investments. We know that renewable or infrastructure investments have less correlation, or less correlation. That's why they have a low volatility, and that's why if you are a long-term investor, you probably have a relevant performance on it. Well, one of the next or last question was then, are you ready to rise your investments in sustainable investments? Also, is this a sector or a focus that you are going to invest more than at the current situation? And I think this is quite interesting, because you may know about the new asset class, alternative debt, which means bonds which are, or debt structures which are investing in infrastructure. This is about most of this alternative debt. And State Street, AXA, Winterthur, and I think Goldman have done a global research on that, on this alternative debt, and they have asked about 450 of the largest pension funds, and all of them said, currently we have no income on the bond side, so we have to go a bit more risky or thinking more long term, and that's why alternative debt is something where we gain at least 3-4% steady, with a low correlation, with a low volatility, but steady positive performance. And we see this here as well. Only 23% said no, we won't rise. We are happy with that what we have. And all the others are said at least yes, maybe, or for sure we're going to rise more into in sustainable investments. So, probably the last question was, how many mandates are you giving out to external investors? Is this common in India for professional investors like family offices that you're giving mandates? Is that common? Or are you have the whole capacity for asset management in-house? Is it, what are you? It's not common. So you have the whole competence in-house. Okay, good. So this actually, sorry to say, this was actually the things. Good to know, then I can stop now. Well, we're going over to the solutions. Saying in Europe, or in the German-speaking Europe, Switzerland, Germany, and Austria, at least half, also all of these who have answered to this question have at least given, 50% have given up to 4 mandates out. And actually, I can imagine that there are certain asset classes that you don't have the know-how, but it needs a bit know-how also to control it, to control the mandates. That was actually, you have seen before, the risk that they have as well. If they gave a mandate into a certain sector where they don't have the know-how, but then to control the mandate. Well, this is somehow, actually for me, just the moment to change into a question: what is the investment and risk appetite of professional investors in Switzerland? And, well, hope you can see that. We have on the horizontal bar, we have the client or the professional investor segment. The first is pension funds, the second is banks, asset managers, insurance companies, so life insurances, or the asset managers of life insurances. Then we have treasurers, corporates, collective investments like funds, and at the end, family office. I have done family office at the end because if they want to invest, they are able, because they have not that much guidelines and structures and everything. If you are talking about of the parameters which are on the downside, we have liquid and tradable, we have fixed interest, for example, we have sustainable, the ESG factors, parameters, or the SRE parameters. So going down up to green bonds, volatility, investments, assurance. Is this important for the investors, the investment insurers? And at the end, again, the costs. For me, one of the things that is important, you will have the presentation afterwards on the things on the website of Aditya. I think this is which, for me, important is to say that liquid means only liquid on the bank account in Switzerland. Anything else is not liquid. Even if you say money market or whatever, daily liquidity, as we have on our platform, it is not liquid to the investors. Liquid is what you have on the bank account, and that's it. That's one important message out of it. And second, the investment assurance. Somehow they do either hedge the currency, that's actually obviously the last. Investment insurance is very important for all the, either in controls, either in the portfolio assurance that you have certain hedge strategies in the currency, or in products that you are hedging certain sectors. So this actually is very important. And at the end, also the factor, the parameter cost. Cost is only for the banks not a real matter. They just get it over to the clients. So they don't have a problem with that. Otherwise, all the others, they are focused on on costs. I would say the asset managers, they're producing costs, but they're taking some part of it to themselves. That's what happens in Europe sometimes. So they are officially, they are looking on the costs, but they take a good part of it as a commission for themselves. But otherwise, costs is really a matter. With this slide, I'm closing a bit the part out of my diploma work, and I'm going over to the solution. Solutions that I have structured, or actually we have structured in our company over the last 4 or 5 years. maybe some of you know. Okay, come on. Voila. Some of you know, 3 years back, I was standing here and was talking to you about core satellite strategies. This was actually somehow the start of our company 5 years back. We had core satellite strategies, classic and alternative core satellite strategies, and we are doing mandates for institutional investors. So actually we became, as it was more and more not so easy to, let's say, get a mandate, because even Indian professional investors don't give mandates. And in Switzerland, it happens that mandates were given only to the big banks, because the investors, the professional, the family offices, the asset managers, the banks, they just said, if we are giving the mandates to banks, we are legally and compliant assured. And that's the whole thing. It doesn't matter somehow, that's what I'm saying, it doesn't matter somehow about the performance. Well, that's why we went back to our roots and developed a global income fund some 3 years back. It was always about the style we were investing, low or no correlation to traditional markets, niche products, low volatility, and with this strategy, we won't have a rise of 20% a year, but we never will lose a lot of money, or we lose, I cannot say never, but we don't lose money actually for our clients in this strategy. And it is also the basic for what I'm going to present to you now, and which is actually kind of an innovation. We have developed, and if you are coming out to our booth, to my stand outside, we have recently developed a bond platform that's called Lily Bonds. Listed, liquid, asset-backed bonds. Now, it means liquid. The first 4 products, we have launched 2 products in June and 2 products last week. The products are daily liquid. They are listed at the German stock exchange. That's why they are transparent, they are regulated, and they are controlled by the Financial Market Authority in Germany, which is one of the most strictest. If you know Germans, they are strict. So actually, liquid, it is through the composition of the portfolio, and we have daily prices and a weekly calculated NAV. If it is written asset-backed, it is not a junior loan or a senior loan. It means that the portfolio is pledged for the bond. And at the end, what is it, a Lily bond? The Lily bond is the opportunity to invest or to do a portfolio of conservatively managed incomes, asset classes. Out of the portfolio, the German stock exchange at Frankfurt offers a certificate that you may list a bond. The investor is buying a bond. In the case of Lily bonds, it's a bond of 4% per annum, daily liquid, and listed at the stock exchange. It's at the moment, I can tell you, in Europe, where we have zero capital markets, zero yield at the capital markets, it's unique. Daily liquidity, 4%. And what is important is the investment assurance. Again, our portfolio, few or non-correlation, our strategy is still the same. Low volatility, and due to the fact that we have 4%, that we're paying as a minimum interest. We have a sharp ratio of 2.5, because the portfolio itself makes about 5.1%. I just have to go back to the very first beginning when Aditya said that actually I have built up the very first ETFs, what I have said myself, the very first ETFs in Europe in 1999. Anybody wanted to invest in ETFs at this time? Well, some. But today it's one of the largest markets. If I compare today this opportunity of an exchange-traded debt structure that the German stock exchange is offering, and we are able to offer 400 basis points over the market average. Well, the market average is maybe minus, but I'm just saying zero. It's incredible potential. And we have now done these lily bonds. Please have a look afterwards at our stand, because the time is a bit short. But actually, it is incredible opportunity that you have a product that you are out of a portfolio, you get a listed bond at the stock exchange. By the way, it is tradable like a stock. The Americans can buy it, the Latins can buy it, all Indians are invited to buy it, the Asian are buy it, everybody are able to buy it. It's like a stock listed in a global stock exchange like Germany. The chances for the investors is to rebalance their portfolios in liquidity, in risk, because we have very low volatility, in currency as well. If you are a bond investor, we have euros, we have US dollars, and we have Swiss francs, and we pay 4%. This is the start of something that I understand it's becoming very big. And we started, and we hope there are many, many, many who are following us, that there is a good competition in the market, because only the competition will enrich the market itself. Saying that, what is an income class? I think, at the beginning there were only bonds and real estate. Now there are many more different asset classes in the income. So high yield, various niche products, infrastructure is as well, real estate, REITs, yield costs. There are so many more opportunities to invest in income. Important, if you're going to invest in a niche, the due diligence. You have to do a really strict bottom-up due diligence, otherwise you get wet feet in the investment. So actually, platform I told, maybe you have afterwards a look. One of the bonds that we have listed last week is actually a socially responsible investment bond. The target or the focus is on ethic and responsible investments. Again, it is in Swiss francs, and the issuer company is in Luxembourg, listed at the stock exchange in Germany. I just would like to recommend this. I think it's a good thing. Probably a target or a focus for many of the family offices in here. Well, I had kind of the approach of our portfolio. I want just to say that we have a triple core satellite strategy on the liquidity, on the cash flows, and on the investment. 2/3 liquidity daily, 1/3 monthly. It is even 4/5 and 1/5. Cash flows, as we are paying our interest quarterly, we need also cash flows in our underlying assets. So we have 2/3 products which paying cash flow as well. And at the end, the investments that we are doing, 2/3 are collective investments, which we know the managers over a longer time, which have a certain track record. And that's why we are quite happy with the performance and with the risk assurance, and very certain to invest. Voila, this you will find at our things, at our booth. Please come over and take one. This is a page that you can take at our booth. We just say the performance driver, what guarantees the success in our products, and for me, myself as a manager, the investment assurance. We would like to limit it and to offer a very low risk. Boom. Everything else you will find inside the presentation. Who we are a Swiss company. We are several seniors. One of my partners was a CFO of Deutsche Bank in Switzerland, of another bank, of a bank in the south of Switzerland. Another partner was general director at Société Générale, and he was the founding partner of Lixor. Lixor is the largest associated company of Société Générale. We have 2 or 3 other people, and actually we are, for the services, we are mandating people externally. It's about that, what I can tell you. This is the structure. Well, thank you very much for participating at this presentation. Do you have any questions? Well, happy. Oh, good.
Thanks for your presentation, but what I still wonder is that when in India we have around 18%, 20% kind of returns and interest on some of the instrument, why will we invest in a 4% Lily bond?
Why?
Why an Indian will invest in a 4% Lily bond when we have asset classes here in India where we can get up to 18-20%, what we saw in the last presentation?
Very good question. Actually, the thing is, an bond investor, wherever he is in the world, he has to diversify in currencies. The risk only to invest a third of the portfolio and in the bond portfolio only to invest in one currency is a big risk. You may do it, but if you go beside left or right, then you go into dollars or in euros, probably, maybe in others. But then, as soon as you go into euros or dollars, I have to tell you that our product at the moment is unique. 4% daily liquidity, it's unique. Due to the fact that the investment assurance is here. We have really a low risk in the portfolio due to the low volatility, no correlation. But I understand what you're saying. Actually, I lived 4 years in Russia. What happens? I had about 10, 11% on my saving account in Russia. When I went to Russia in 2010, 100 rubles were about 3 Swiss francs 30, and today it's 1 franc 20. 70% lost. So what you have out of your 10% on the account? It is the risk that you have a rebalance due to diversification of the currency. Is that an answer to your question?
Partly yes, but that still not convinces any investor to invest into 4%. You have answered your question, my question, but still, it is very difficult for Indian investor to invest into 4%. I accept that there is a diversification of currency, there is a diversification of geography, but there are too many avenues available here itself, which also diversifies the asset class.
I understand fully what you want to tell me, because you have to explain the client why you get in this investment only 4% if the savings account pays 10, 11, 12%. That's what you're saying?
Yeah, even here, the saving account pays 4%. Yeah. Which is as good as you said, in Switzerland, liquid means whatever is in the bank, not in the instruments or a demat form. But here also, 4% savings is given by all banks.
I understand you, but maybe you have, if those family offices maybe not only have the money in India, and then that part of the money, which is not in India, has to be invested somehow in other currencies. They won't invest their foreign money into the Indian market, probably, or just maybe private equity, but not in the rupiah, if they don't have to. So, saying that, then they get the diversification need. and then we are a partner to help.
And are you able to achieve 4% because of sustainable energy investment, or?
Sorry?
Are you able to achieve this 4% because of your investment in the sustainable energy bonds, energy space, or it is across different industries?
Also, we have actually 3 of our 4 products are sustainable or green bonds.
Majority.
Sorry?
Majority of these are.
Yeah, focus. Global real estate and infrastructure is one strategy. Diversified energy is another. We have 1/3 in this fund, special fund. We have 1/3 is renewable energy, 1/3 is classic energy but sustainable, and the third is an equilibrium where we are putting trading, energy trading, and some direct investments like REITs, like yieldcos, or some trading strategies, some quant strategies, but focusing on sustainable investments. And as I said before, one of probably our flagships will be the socially responsible investment, which will be in Swiss francs, and the issuer is in Luxembourg and listed stock shares. That will be because all of us who has money to invest or has enough money to invest, so at a certain point, we do also like to do something good with our money. Philanthropy somehow, and this product really helps you as well, because we are investing in ethic and responsible topics, and that could actually help you in your portfolio management. Swiss francs is a stable currency over centuries, over decades.
I have one question.
Yeah. Sorry. I'm sorry. Don't mind. It's okay? Outside or now?
Okay, fine. Like, you invest in real estate, which is a long-term asset, sort of.
Yeah.
Do you face an asset liability mismatch?
This product, real estate and infrastructure products, we have at least 2/3 in collective investments, where we get, and 1/3 in. It's very important there that we have not a direct investment in a long term, like a renewal, like a wind project or the photovoltaic or the whatever. We are going over the collective investments to get that opportunity that we are still liquid, and the other thing we make daily direct. Sorry. Thank you. Other questions? I'm at the stand afterwards, and I stay a little bit longer after the conference. Thank you very much for being here.
Thank you, Philip, and apologies slightly running behind schedule. Otherwise, you would have loved to continue the Q&A.
Thank you. Oh. Hey. Thank you very much. That's a great thing to come here. Really, I really appreciate it.
And we'll promoting this.